Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, having climbed to a fresh 2-month high against the US dollar, the market has turned rather sharply for the Australian dollar. Backing away from that 70, 60, 65 level, the market's plummeted and now finding support around 68.70 or close by there. Keeping an eye on this pattern. If this ends up from the New York close to a hammer, then that would indicate that the market may have actually found a potential base that is around 68.70 and therefore could see a rise up towards 69.5 and maybe back towards 70 cents. I haven't abandoned the bullish outlook, and overall I still expect to see further gains from this bottom side of the range and therefore look towards initially to 69.5 and reassess. The euro, the market ended up posting an engulfing candle. Along with that, the US dollar, which measures the greenback strength against a basket of 6 major currencies, also posted an engulfing candle after rallying from 104.86 to around 106. Keeping an eye on this pattern, we have to see whether or not the market has actually found a near-term base, which is close to around 101.30.40, and if so, could see a recovery. However, with that being said, a break of 101.30.40 would open and expose the recent downside risk. That is towards the region of 99.45.65 and reassess. The dollar yen outlook, well, the market come back very strong on Tuesday after finding support close to around 129.70 to 130, and from the rejection has eased the market out of an oversold condition. It was highlighted yesterday that a bullish correction could come through. Well, I would say that from last night's price action isn't quite a correction, and therefore looking at the RSI, we're still under the midway point, so therefore we should not rule out another down test. That is towards the region of 131.5. As long as 134.20.40 is intact, then the bears should return and calmly take the market lower. The sterling outlook, well, the market took a bit of a rejection from that top side, roughly around the region seen here. Now it is of 122, although the call still is to 122 to 124. As long as we don't break the level around 120.60.80, then I say the balls are still very much intact because the RSI hasn't broken down. And therefore, if it is intact, then we could see a rise back up towards that top side, as Super Thursday still keeps the attraction, with the Bank of England expected to raise its interest rates by 50 basis points from 1.25 to 1.75. Finishing up with gold and oil, well, as we can see, the market has retreated from that 1,774 level, and keeping an eye on this base, which is around 1,755, as a break would give further indication to the bear case and maybe even reinstate the downside to the 1,730 area, or maybe lower to 1,700. It is a key level, so keep an eye on that. But until we break it, I still won't rule out further upside tests, as we are a bit of an equilibrium where we are at the moment in terms of the balance. Nevertheless, I feel that not quite broken down yet. It really depends if the dollar index can confirm its engulfing candle, and that is, we need to keep a very close watch to that. And wrapping up with oil, well, the market took another down challenge, and as you can see, briefly looked towards that area around 91.5. Technically, we're still bearish, and therefore I do look towards $90 to maybe 88 as a potential target, with any upside challenges should find a cap around $96.45.65. Well, that wraps it for today. Thank you very much for joining me, and as always, keep an eye out for the intraday report, and I hope you enjoy the rest of the day.